Hello and welcome to our first session of the event. And I'm delighted to be joined by the largest banks in the region and a leading technology player. Setting things up for the 3 days, we'll be looking at the outlook for 2021 and beyond across financial crime and fraud. So introducing my fellow panelists, first we have Kim Downs, who focuses on enterprise fraud risk at ANZ Bank. Kim manages fraud and sanctions risk, providing policy and second line advisory and support ANZ's institutional and retail business internationally. Next, we have Jamil Ahmed, Chief Compliance Officer at HSBC Singapore. Jamil is a member of various industry task forces and initiatives across Singapore, focusing on AML, counter-terrorism financing, sanctions, and fraud. He is also a steering group member of Singapore's AML CFT Industry Partnership. We also have Victor Apps, Head of Fraud Risk Management at Standard Chartered Bank for Hong Kong, Greater China, and North Asia. Prior to joining Standard Chartered, Victor worked at a number of other financial institutions in various roles related to AML and fraud risk management. And finally, I would like to welcome Nicole, Head of Fraud at NICE Actimize. Nicole works with financial institutions to ensure that their technology addresses the changing needs of the fraud and financial crime landscape from both a functional and technical perspective. Thank you all for joining.
Thanks for having us.
Thank you.
Great. So to kick off the discussion, I'd like to ask Kim perhaps to talk about some of the trends and challenges of the past 12 months. What lessons can we draw to help us better address fraud and financial crime risks moving forward? Kim.
Okay, thank you, and happy to be here today. I think, as referenced previously, COVID's impact has been to really expedite the digital transformation. I think no other single event would have pushed that transformation agenda in quite the same way and at quite the same scale that COVID did internationally. So I think that was the first thing that I would like to highlight. The other one is the commercialization of crime. And I think very often, as we're all facing into our own institutions, we kind of forget that this, the business of crime is very real. And I think one of the things that we've seen over the last couple of years is just how effective criminals are at commercializing crime, and that includes, leveraging new technology, new markets, new entrants, joint ventures, collaboration, different target audiences. They really are taking the best of good global business and applying that to their criminal activities. And that then leads me to the final thing, which is they're really leveraging the best of new tech. The best of that infrastructure, the best of those industry practices, agile, pivoting to where they find success. And I think that, enables them to do what they do at speed and at scale and do that really, really efficiently. And I think that combined with the COVID impacts more generally, what you've got is this almost sort of prime environment for criminals to flourish more generally. So those would be the trends and also the inherent challenges that I've noticed more recently.
Thank you, Kim. And Victor, perhaps you can speak about some of the key challenges you see in Hong Kong and the Greater China area. I mean, for example, how have regulators been responding, and what does that mean for the industry moving forward?
Well, in terms of key challenges, number one, I'd like to reiterate on what Kim was talking about. It's the sophistication of these authorized push payment scams at this point. Authorized push payment scam is an umbrella term which implies any situation where a person's been duped into sending money. So this can include business email compromises or an SMS phishing attack. We've seen business email compromises where the fraudster has obviously been monitoring for example, lawyers' network travel and emails, and then sending very tailored emails to individual people closing a deal. There was one I thought was very clever, the Hong Kong Post. COVID, people are getting packages all the time. You get an SMS or an email from Hong Kong Post saying you need to pay an extra delivery fee. Most of us wouldn't think twice of it. That was a scam. They had a nice nice little web page set up, looking pretty sweet actually. And we've had a spat of SMS phishing campaigns targeting the major banks here in Hong Kong. Ms. Carmen Chu was talking about that. They're getting really good. Their web portals are perfect. They even mimicked alphanumeric headers in the most recent one. So yeah, one is the sophistication of the fraudsters in this space. Two, it's disrupting the money mules, the plumbing behind that underpins all these scams and all these events, and using the network analysis and really getting that right. And one point I'll get to later is it's not just a bank view. If a bank exits a network, it goes to another bank. So it needs to be an industry response. And third, I think there's challenges posed by data leaks. We saw one recently in a payment processor in Hong Kong, which had impact across all of Asia. As we move more towards APIs and data being transferred between various parties, the importance of cybersecurity and making sure data is well contained and secure is key, because the fraudsters, when they get that information, jump on it right away. As to the second point about regulators, I won't spend too much time talking about Hong Kong because Ms. Chu gave quite a good update on that. Yeah, I think China, you see an uptick in the amount of attention they are spending on fraud. They're publishing lists that they want our branches to blacklist and flag to them. They're also paying it in terms of just general financial market stuff. I'd say China is continuing a push looking at fraud in their financial markets. And what I find interesting is comparing and contrasting the various, I cover Greater China, North Asia, so I'm looking at Korea, Taiwan, China, Hong Kong, and their evolving views towards crypto. China is, not so friendly towards it, while Korea and Taiwan are, I think, Taiwan is bringing them under their Money Laundering Control Act. Korea is asking all their cryptos get registered by September 24th. So I see that space in terms of regulator response, and the difference is quite interesting. Did that answer your question well enough, Nick?
Yeah, no, absolutely. Thank you. Very interesting.
Cool.
So Nicole, in your work with financial institutions in the US as well as across APAC, what have been some of the main concerns firms have been looking to address from a technology standpoint?
Yep. And, kind of echoing everything that Kim and Victor just talked about, financial institutions are looking to balance these two things that really came into light over the last year and a half. The fact that the rise in the number of payments that their customers are doing, especially online, as well as that rise in the sophistication and the continuous evolving of the financial crime that they're being hit with. So from a technology perspective, financial institutions are looking at that balance of making sure their systems are able to scale when it comes to this shift in, the different payments that they need to support, the shift in the volume of the payments and the expectations from their customers in that customer experience with those payments as they move, more digitally and as they, evolve. But then also scaling their analytics to address the financial crime that comes with those changes. So, both Kim and Victor touched on some of these rise in scams and rise in, the fraud that the fraudsters are hitting the institutions with. And I think, the last year and a half was a reminder that fraud evolves and that fraudsters are not, stopped by anything, that they will, take the path of least resistance and they will exploit the systems that, we all put in place and we're all, involved in. And, just rules and just old, systems are not able to scale. So with analytics, with something that, is actually able to use all of the data that is brought into it and look for those patterns of behavior change, we can kind of help combat those fraudsters and their, rising level of sophistication. So it's balancing that, making sure that good customers can transact in the way that they want to, and they're having that seamless customer experience, but that the systems are evolving with the change in the financial crime that comes with that.
Great. Thank you very much, Nicole. Jamil, you're based in Singapore. For you, what are the key focus areas in Singapore when it comes to kind of fraud and financial crime?
Thank you, and thank you everyone for tuning in today. So look, I think that from a Singapore perspective, I don't think it's too dissimilar from what other markets have actually called out, and some of the other panelists have been quite elaborate in terms of their coverage of some of those areas. But I'll just sort of cover things from a Singapore nuance perspective and sort of highlight some of the peculiarities we might be seeing from a Singapore perspective. But not surprising, fraud continues to be an area of focus for the industry here, as well as regulators and law enforcement. We've had cyber fraud and scams, which have continued to increase, and scams are up 65% from prior year. So that kind of shows the kind of level of increase that we've had whilst we've been in this COVID environment. We've seen spoofing tactics continue to evolve. I think, there's prior comments around some of the methods that were used in typologies, which I don't think is too dissimilar to what's happening in Singapore. But I think from a spoofing perspective, where websites are created to dupe people unwittingly into believing that they are something that they're not, I think that has continued to evolve at pace and shift rapidly as one sort of typology seems to kind of exhaust itself. We've seen another sort of set of participants or industry that's being targeted, and we've seen that range from e-commerce firms, so your equivalent of your Amazons in Singapore, so Shopee, Lazadas, where we've got individuals that are purporting to sell products or actually contacting individuals on the premise of jobs, etc., and allowing them to, or asking them to kind of click on various different hyperlinks. But we've had some spoofing in terms of e-commerce representation, or false e-commerce representation, should I say. Delivery services, with DHL, they've also been the case, and also on government departments, where we've had individuals portraying, or fraudsters portraying themselves as government officials from various different ministries to dupe people into revealing sensitive information, and banks themselves have not been immune to that also, where fraudsters have now started to try and mimic websites of banks, and some of these are quite elaborate. I've had a look at some of them myself, and to the unwitting, unsuspecting person, they do look very legitimate. So I think that's the one thing I'd call out is the legitimacy. Well, not legitimate. Sorry, the kind of the reality that's injected by fraudsters in terms of these scams, that they're not immediately obvious to unsuspecting individuals. That's one thing to call out. But we've also had areas of trade and investment fraud. So this is in the high profile, broader scale things where investors have been kind of duped into investing in some commodities trading that haven't necessarily been, there's been nothing there to support that kind of activity. So that's another thing I'd call out. And I think, Carmen kind of mentioned this, and it's something that we've been observing ourselves, which is the mule account side of things, and having network of mule accounts or shell companies that are being uncovered in banks and by law enforcement continues to be an area of focus. So a couple other things just to sort of highlight in terms of Singapore focus. So shell companies I touched upon there continues to be an area of focus for us in Singapore. We do have in Singapore, we feature quite prominently in terms of ease of doing business, and therefore setting up companies, etc., through CSPs as possible for legitimate purposes. But obviously individuals are using those for illegitimate purposes as well. So that's an area that we continue to focus on, as well as some of the other vulnerabilities I think financial services have had, given the remote working and the focus in digital onboarding, is allowing fraudsters, international fraudsters and criminals to do things at scale from the comforts of their own home, right? Rather than having individuals engage with banks other means, face-to-face, etc., etc. It's now coming through remote onboarding journeys, which means that these kind of things can be, can sort of evolve and can be conducted at scale. And the final thing to call out is really an inherent risk that we continue to have in Singapore, which is on proliferation financing. We are a commodities trading hub, and we do have one of the busiest ports in the world for import and export, and therefore there are heightened risks for Singaporean entities caught up or being engaged in sanctions evasion activities linked to North Korea oil imports and certain exports. So those are the kind of things I'd like to summarize for Singapore.
Excellent, thank you, Jamil. We'll be covering kind of shell companies in one of the panels tomorrow, but Jamil, kind of back to you on this. Based on your work with the industry, what are some of the initiatives underway to mitigate risks presented by these shell companies, and what should financial institutions be doing to address this?
Well, local MES has been focusing this quite heavily with industry for a number of years now. So we've had some best practices that have been issued and published on the misuse of legal persons. Effectively, that's a shell company risk we've been sort of discussing, and that continues through the PPP that we have, the AML CFT Industry Partnership, which continues to focus heavily on how we kind of detect and prevent the onboarding of shell companies or networks of shells infiltrating the Singapore financial system. So a couple of things that we're looking to do more tangibly and bring into conversation, both within banks, but also through various different industry conversations, is how we can actually detect or improve the detection of red flags that will be associated with shell companies. So, really looking at the introduction of these through CSPs, the use of nominee directors as two examples of areas to consider as red flags when considering or identifying shell companies. But crucially, one of the key focal areas has been the deployment of analytics to act as early warning systems that can highlight potential shell company behavior. Now, CDDs, obviously, onboarding processes are the first line of defense when it comes to preventing the onboarding of shell companies. But we do know through what Carmen had actually shared previously, but also our own experience, that sometimes the detection of these take place post onboarding. So having the appropriate early warning analytics or systems in place, and it doesn't have to be anything too elaborate like AI, although that holds significant promise, but some indicators to detect where there are changes in account anomalies or account behaviors. So dormant accounts suddenly becoming active, changes in certain authorized signatories from domestic to international based individuals, as well as having common IP addresses and devices that are used to control or log into accounts, are all key signs of potential shell company activity. So I guess the key thing is how banks themselves deploy these kind of analytics to detect these post onboarding, if they are onboarded and not rooted out at the onboarding stage, and how these companies can actually be fast tracked into exit. Because I'm also aware that various different banks have various KPIs at various different stages of the financial crime detection and exit process. And the final thing I just want to sort of share is we can't underestimate or undermine the significance of information sharing, typology information through public-private partnerships, where we do sort of look to tend to spotlight some of the typologies that we've seen, some of the controls that may necessarily have failed to operate and therefore allowed the onboarding of certain shell companies. So I think really the sharing of best practices, typology reports, continue looking to refine controls is really the key thing that we've been focusing on in industry, and obviously I'd encourage others to do so as well.
Great, thank you. And Victor, I understand obviously shell companies to also be a concern in Hong Kong as well. And perhaps obviously some of the other markets you covered. Do you have anything to kind of add to what Jamil was saying?
Shell companies are basically not just a Hong Kong problem or a Singapore problem, it's any major financial hub. How to combat them? I think corporate transparency is part of the solution, but it isn't the only solution. London, for example, really open corporate registry, still has money laundering in there. What you need to do is get that corporate registry, you need to have it easily available for network analytics, and then combine that network analytics with other information like at Standard Chartered, we can track IP address and device ID of various things, try to find commonalities in phone numbers, identify these networks, see what connects them, and try to disrupt them. But that is, as I said before, and we've talked in other points, it's all about the collaboration with other banks. Disrupting, getting a network out of Standard Chartered just means they pick up somewhere else. We've seen some countries, Korea, Netherlands, really work on having banks interact directly and sharing this information. I think Netherlands, the top 5 banks, set up TMNL, Transaction Monitoring Netherlands, where they pool their resources and they have that sharing. Hong Kong is on the right step there, but it's still very much through FIMLET or through the public people. There needs to be exchange between the privates very quickly. But as much as we talk about data sharing between banks, as long as it's domestic, we're not going to really disrupt it, because these fraudsters have demonstrated an ability to work internationally. And so I do agree greater domestic bank sharing would be a huge step in the right direction, but our strategic eye needs to be on how do we share internationally this data.
Yeah, absolutely. And Nicole, speaking of internationally, do you have a few kind of words to add on this topic?
Yeah, so, Victor touched on it, a bit around, it's all about the data, and being able to connect the dots, requires a system to collect that data, and, technology to be able to comb through it, to look through that data, and being able to collect more data, from consortium-based systems or data sharing, is something that, a lot of countries and financial institutions are looking for, but we're also seeing, financial institutions find data in places that maybe they weren't able to previously. Now with the ability of technology, and an example of that is financial institutions that I've worked with, going and using data vendors that mine the dark web, and mine some of the the fraudster forums, and the way that this data is being sold, or the way that the networks are actually the fraud networks are communicating with each other. So, just like I said earlier, just as fraudsters, evolve with technology, financial institutions can leverage some of that. And there are, vendors out there that, we work with, that, will actually go through and pull that data into, the financial institution system as another data point to be able to connect the dots. So just continuing to collect as much data as possible and let technology, throw technology at it to help, uncover some of these hidden links, is one way to continue to keep up with that and find those relationships.
Excellent. Just before we move on to kind of the conversation of data in a bit more detail, Kim, I don't know, do you have a couple of kind of comments on the Shell side of things?
No, nothing my side.
Cool.
I replicate what has been said by Jamil and Victor on that side.
Excellent. So in terms of data and how we use it and how it's shared, perhaps, Jamil, what are some of the opportunities and barriers to kind of enhancing information sharing between the banks and law enforcement?
Thank you. I think the upside for enabling information to be shared across banks at scale is significant, but it has to be done so in a manner that's controlled, that gives confidence to customers that information is being shared securely, with the right intended purpose for financial crime risk management. So I think, whilst the potential is there are various different checks and balances that have to be deployed before we can actually look to share information between banks at scale. We've been asking some of those questions ourselves through some of the initiatives in Singapore in terms of how we can actually develop a framework to enable information to be shared at scale between banks and what would be the right trigger points to do so. But this is something that requires a very healthy and effective public-private partnership, because each stakeholder involved in developing such framework has their own sort of responsibility and obligations to champion some of those activities. For example, regulators, law enforcement, in order for this information to be shared with banks, may need to sort of champion legislative changes through their own various different legislative bodies to enable banks to share information, and therefore for the banking secrecy provisions that exist in many jurisdictions to be revisited and amended to enable this to happen. And that in itself, we know, is not an easy feat. So there's got to be strong buy-in from regulators, law enforcement, government agencies to do this, because that will really pave the way for the second steps to follow. So I think for first and foremost, it's really having that kind of ownership there, and strong sponsorship from government to enable this to take place. The second component would be really around the control of information, the level of oversight and supervision that regulators will have in terms of information exchange, because there are obviously mechanisms that we can establish in terms of triggering our information request. But that has to be obviously held securely, and there's got to be various different controls, both within the banks themselves, but also intermediate or central party that might house or retain the data, for that to obviously be secure, and not, allowing inappropriate access through hacking or various other cyber activities. So I think that's a key challenge that also has to be overcome. But if those can be surpassed, and I think we've heard some examples of some markets that are actually doing some great work in that space, and Singapore's will follow suit in the next few weeks as well. But we will be. I think the upside is definitely there. The final thing I'd say in terms of what this enables to do, and talk about some of the benefits, I think we've talked or covered previously the promise of network analytics, having the ability to supplement and complement a bank's data with the provision of information from another bank, either through transactional information or KYC CDD information, to enable a more thorough investigation to take place, and therefore a more comprehensive suspicious transaction or activity report to be filed to regulators. I think that promise is really significant, and I think those are going to be some of the next paradigm shifts in terms of how jurisdictions tackle financial crime, because we no longer will have the ability for criminals to arbitrage between banks. We'll no longer have the ability for criminals to actually look to hop between banks. If they've been exited from one bank, we can just cross the road and open an account with another bank, and that information doesn't necessarily always flow through to the other bank that this individual, this actor, has been exited. So I think the ability for jurisdictions to protect themselves will be significantly enhanced through having some of these activities in place. And from my personal perspective, I'd love for other jurisdictions to kind of follow what some other countries are doing, including Singapore, to enable this information at scale. And the next step is, and I think Victor kind of touched upon this, is, well, once you have that information sharing domestically, how can we actually promote information exchange from one jurisdiction to another, to enable prosecutions and arrests, etc., to take place, and that disruption to take place cross-border, because as we know, much of this is a cross-border activity.
Thank you, Jim. Kim, would you like to add a kind of few comments to what Jamil was saying?
Yeah, look, I mean, I think I echo what's been said before, and I think both the opportunity and the barrier is around the data, and the irony is that the protections that are in place, the data privacy, all of those things which absolutely have to be in place to protect individuals, in some ways are prohibiting us from protecting them from criminal activity. So it's that balance between generally protecting their data and their privacy, the storage, aggregation, collection, etc., but at the same time protecting them specifically from criminal activity. And I mentioned it before, the way that criminals share and have commoditized their data exchange, the way they leverage infrastructure to share information and data, is unprecedented. And I do really believe that unless we find a way to replicate that best practice, it will be very, very difficult. So I think this is, back to Jamil's point about, public-private sector, and Victor's point about it must be available cross-border, using RegTech and those kind of things. Unless we find a way to collaborate, share that data, then we won't really have the intelligence or the insights which are key to us being able to disrupt, detect, and prevent this criminal activity. That would be my take on those things.
Excellent. Thank you, Kim. So, I mean, the ability to respond obviously quickly, even when threats are detected, is something we kind of often hear as an issue. Victor and Kim, perhaps you can talk a bit about how effective the industry and law enforcement have been to respond to kind of financial crime threats. Perhaps Victor, if you want to go first.
My opinion of this has evolved over the last few years. A few years ago, I was a bit down on it. I felt like banks were all about filing SDRs and exiting, and we got a few no consents, but that was it. And I just was worried about it. But I've seen a lot of improvement in Hong Kong. We've seen some high-profile arrests. We've seen greater data sharing through the FIMLIT. I'm part of the Fraud Risk Management Task Force, which sits under FIMLIT, which is working on that data sharing platform, minimal viable product there. So I'm seeing a lot of improvement there. However, I think there's two areas where both banks and the police can work better. I think banks need to evolve out of us managing fraud and money laundering is through SDRs and exits, but thinking about holistically as an industry and how to bring that risk down as an industry. And I think we're getting there, but it's still a bit of a mindset shift. And two, I think we talk about data sharing between banks. What's really helpful is data sharing with the police. I know there's privacy issues around this, but there's another speaker on your conference, and we're chatting, and she was looking to get predicate offense data so that back from the police after an SDR is filed, so that they can profile networks a little bit better. So there needs to be, I think there's great improvement and it makes me happier doing what I'm doing, but I think banks need to come together and look at it as an industry buy down as opposed to just looking out for a particular bank. And I think the police need to explore ways they can get data back to us that we can use in our own analytics and open up that end of it a little bit better.
And Kim, you have some additional comments to Victor's points.
Yeah, and I would agree. You know, like I think we've come really a long way. You know, in Australia, the work with the FinTel Alliance and with AusTrack has definitely demonstrated the power of collaboration and working with the AFP. But actually, one of the biggest things that I take you know, that I think has worked really well is the recent global Operation Ironside, which was a classic, huge, large-scale collaboration effort with the FBI, with the Australian Federal Police, which has, you know, demonstrated the power of sharing information, working together, but also actually being really innovative. You know, almost, you know, back to the point before, it's almost like getting on the front foot rather than just responding and looking at it from a prosecutorial point of view. It's like really trying to get ahead of the criminals. And so, you know, similar to Victor, I really do believe that we're making really great strides as we work collectively to look at this holistically and look at it as an industry, because I think in this case, the whole is definitely greater than the sum of the parts to be able to really prevent and detect, but also prosecute and increase the risk associated with these crimes and really get behind, because it also gives you insight, back to a point made previously about the plumbing that goes on behind. You know, we kind of see the high profile seizures and all of that kind of stuff, you know, the crims all being taken off. But what that does is that then gives us information about how do they operate, what are they doing, how do they network and join up, which then become, I suppose, case studies and typologies and ways within leveraging the bank infrastructure that we can be more efficient and effective about preventing that money laundering and all of that other criminal activity.
Great, thank you. I mean, obviously, you know, from what you're saying, clearly there's still a lot of work that needs to be done, you know, from the industry, from regulators, from law enforcement, etc. Yeah. So from the perspective of an individual financial institution, what should be some of the key areas of focus to bolster the detection and prevention capabilities, Jamil?
So look, there's two or three things I'd call out. I think internally, if you look at what the banks have within their control, is really the strength of the controls. And from my perspective, financial crime prevention, detection, deterrence, much of that still relies on human judgment and critical application of critical thought to raise red flags, ask the right questions, and those kind of permeate through both the CDD onboarding side of things, as well as a transaction monitoring, and you can also extend that to the exit side of things as well, where we're actually deliberating on whether we should continue to retain a relationship because of financial crime concerns. But there's so much emphasis that's placed on that application of critical thought, I think the continued use of training, the use of case studies from postmortems is really a key, should be, in my perspective, a key focal area to enable the right questions to be asked, enable that critical judgment to be applied across the board and consistently. But it is very much the honing of the right sort of mindset across those different aspects of financial crime risk management that I think is really important. And that is a long-term investment. It's not something that we can do once or twice in a year. It's something that has to be focused on themes, on various different risks, on typologies, and replaying back that to the front line in terms of how some of these red flags can be detected, and what kind of questions to be asked for that for those to be raised. So I think that's one key thing I'd call out. The second thing is the use of technology, and when I think folks kind of tend to immediately jump to, when we think about technology or use of enhanced technology, as AI and machine learning. Whilst no doubt those are very promising in terms of their ability to enhance financial crime risk detection, they also bring their own challenges in terms of development, in terms of the various different guidelines that they have to adhere to around data ethics, accountability, etc., explainability. So it does have its own challenges there. And whilst many of those capabilities are part of medium-term strategies for banks, there's quite a lot that can be done that's relatively inexpensive, that can be done to detect things in the data analytics standpoint. And I'm really talking about some of the simple data analytics that we've been discussing around customer profiling, around looking at transaction alerts, transaction profile, rather than relying on the TM system, which, as we know, it can be quite clunky and time consuming to investigate, is to actually look at simple tools like ClickSense that will allow red flags to be kind of developed into a monitoring dashboard, and for anomalies to be highlighted that can require further investigation or probing from the second or first line. So the use of data analytics is and being able to look at some of those tools that are inexpensive but can actually yield some very good outcomes. I'd continue continue to encourage banks to do that. And the final thing is really just to continue that discussion and collaboration with regulators and law enforcement around the proactive sharing of information, typology reports, and for banks to obviously bring that information back and do some self-assessments on controls, on transactions to detect red flags, so the controls are continually being challenged and evolving.
Excellent, thank you, Jamil. And Nicole, obviously your NICE Actimize plays a kind of a key role in providing kind of this type of technology. Do you kind of have some kind of comments and thoughts on this from your side of things?
Yep. So piggybacking on what Jamil just said, I think applying technology to the problem where it makes sense, making sure that you're using technology in a way that addresses both regulatory requirements and needs, as well as the risk, that you're being faced with. And most importantly, having a kind of a technology roadmap that aligns with, the scalability that is required, whether that's, long-term technical and performance scalability, as well as, a roadmap that fits that evolution into maybe some of more of the advanced AI machine learning that, Jamil touched on, that, might not be necessary now, but is required, in the future. And most importantly, from a scalability perspective, looking at technology that can continue to accept data as it becomes available. So as the industry evolves and the systems evolve, where that data that we've all talked about becomes available, that the technology that you're using and putting into a place can accept that down the road. So I think those are key things that I think about, and institutions that I work with think about when building out that technology roadmap.
Victor, do you have any kind of additional comments on the data side of things?
Yeah, I sound like I think we talk about data sharing being so easy. I think there's a flip side to it, is that we have to think strongly about, one, how it interacts with privacy laws. Right now, what we're exploring through the Fraud Management Task Force is based solely on corporations and shell companies. Can we do something similar for individuals? How does that work with privacy ordinances? I think there's also a risk of potential disenfranchisement of people. Let's say somebody got their phone hacked and their account was taken over and used for money muling purposes. Then that person is permanently registered. I think there's an entire thing about security, about how that, making sure that doesn't get hacked into yourself. I think, while I'm not saying it's not something we should do it, but we need to start tackling those problems now, because they're going to be big, chunky problems, and they're going to take a while to resolve.
Okay, great. We have a question from the audience. We touched on it a little bit earlier. I don't know, I'm going to kind of surprise you perhaps here. I don't know who to field this to, but it's around the question of typologies and how do these typologies feature as detection mechanisms in the light of sophistication of financial crime? Would anybody want to kind of like field that? I know we have a panel coming up on that at some point, but question from the audience.
I'm happy to sort of lead in this one. So look, I mean, I think that sometimes there is a lag effect, right, between you know, some activity that banks may be seeing or law enforcement may be sort of seeing before it's actually recognized as a typology, and therefore waiting for typology reports to actually tell you, actually, this is what human trafficking looks like, or this is what terrorist financing looks like, and this is some of the cases that we've seen, might not necessarily be the best way to do it. Rather, I think the key thing is to actually look and have that proactive mindset to hunt for anomalies. Now, we do know that, irrespective of typology, that there are common indicators of red flags that can be applicable across various different types of typologies, from an account perspective, transaction perspective, and I think having those kind of red flags that will be sort of potentially common to various different typologies, and having those early warning indicators, as I mentioned, for cases to be actually investigated and probed further is really going to be key to actually highlight some suspicious activity and before we actually recognize this as a typology. And indeed, I think that's how we actually formally, I mean, certainly within the banking side of things, actually capture these typologies, is that we start to see one case, a couple of cases, and we start to see a trend, but we have to detect them. We have to have that proactive mindset, and we have to have the tools to enable us to actually detect some of those red flags, and then we can actually then look to capture and recognizing this as a formal typology. So I think it comes back, from my perspective, I think it comes back to what we were discussing previously in terms of using both application of judgment, using post-mortem reviews to detect any lessons learned, and using you know, some of those basic data analytics around the account transactional behavior that will sort of throw out exceptions for review, and those should be actually deep dived and reviewed to detect any suspicious behavior. I think that mindset and that approach is the key thing to have, and not necessarily waiting for, you know, typology reports to be formally classified as such, and for that information to be to be disseminated by law enforcement. So hopefully that covers it. I'm happy to elaborate if we need to.
Yeah, thank you very much. So we have a few minutes left before we wrap up this kind of first panel of the event. I don't know, maybe each of you, if you want to give kind of some final comments, maybe 30 seconds, a minute each, or something like that, before we kind of wrap up for the afternoon on our panel. But Kim, maybe if you want to kind of go first.
Yeah, look, I mean, I think the customer is always at the centre of, you know, all that we're focused on. You know, we're really busy sort of, you know, looking at sharing and caring and everything else, but ultimately it's about the customer. And I think one of the things historically is that sort of balance between a frictionless customer experience and wanting to optimize that customer experience, but also the need to protect them from fraud and crime. And I think one of the key takeaways now in this current environment is that one doesn't take priority over the other. I think it's going to be quite telling that if we go too far towards that frictionless experience, but customers are then subject to fraud, that they'll become disenfranchised with your institution very quickly. You know, because people always say, oh, well, we don't want to disrupt the experience. It's like, well, if the criminals disrupt that experience, either way, the bank's going to be on the hook for it. So I think one of the takeaways is managing that trade-off between optimizing the experience, but also needing security and protection, almost as a ticket, as table stakes that they're given going forward, and that there will be equally expectation around that.
Excellent. Nicole, a couple of comments, 30 seconds.
Yep. I think that I'm very, excited and encouraged by, where sort of the industry is moving. I think we're, kind of at this influx of, a lot of innovation on the payments side, a lot of innovation on the detection and prevention side, as well as, consumers really pushing, institutions to think about things a little bit differently. Exactly what Kim said, that balance between customer experience and risk mitigation. But, I think it will, take kind of continued, look into systems in place, look into, how balancing those things, really can work in a real world scenario. But, I think it's been great kind of having this discussion and thinking about, what that looks like, both as a consumer, as well as a technology, provider and, a financial institution. Great.
Victor, any final comments?
We don't have a lot of time left. Data,
No.
collaboration. That's it.
Fantastic. Jamil, you got 10 seconds.
Look, just let's be proactive. It's a complicated problem, evolving problem as we've seen. We do need to stay one step ahead of the criminals. So let's be proactive and combine our views to tackle this.
Fantastic. Excellent. Well, that's been a really good session to kind of kick off the event. Obviously, tons to talk about, but over the next 3 days, we'll be kind of covering a lot more of these discussions in a lot more detail. Thank you very much to my panelists, Kim, Victor, Jamil, and Nicole. Our next session is coming up in a minute, and we'll be looking at changes in global sanctions regimes, and it's going to be hosted by my colleague, Manesh Samtani. Thank you very much for joining the session. Goodbye.